systems.
We've seen even the volumes that come through greatly rise up because now there is faster clearance, a seamless flow of cargo, movement of goods as well, and the process is simplified. In that way, there's an increment in the volumes of goods and services that go through the border.
In 2014, URA saw a change in leadership. Doris Akwo, who was at the time Commissioner Legal, assumed the role of Commissioner General from Allen Kajina. Doris would go on to consolidate the modernization gains put in place during the Allen era. She later went on to launch the Uganda Electronic Single Window on the 4th of November 2016. Under her leadership, URA saw the blueprint of the digital tracking solution take shape in 20.
It has been a cold morning and I hope all of us are getting warm. Thank you for joining in, and for today's Tax Mchuzi, we are continuing with the second episode, which we have dubbed Tax Obligations for Landlords Part 2, and we shall be continuing with the questions that weren't answered in the last episode last week with a tax expert who will be introducing herself, and we shall attempt to answer all the questions that you, our landlords, may have, and also show you a quick computation of rental tax. And please, if there are any questions, you can leave them on our Twitter, on our Facebook, on our WhatsApp, and also on Zoom for those who have joined in. Thank you so much for joining in. My name is Elizabeth, and I'm glad to have our tax expert today. Please introduce yourself. Good morning.
Good morning to you. Good morning, all listeners. My name is Claire Musime Bakanga. I'm a supervisor with a rental office. A rental office that is obliged to monitor rental tax across the country and at the same time account for it. Thank you.
Thank you, Claire, for joining us. And hopefully, again, like I said, today's topic is tax obligations for landlords, part 2. We had Pade last week, and he actually made a good attempt of answering a lot of questions that we got.
Great.
And I believe you will do the same.
Yes. I will.
Yeah, so maybe we just kick off and get to know what are the current rental tax rates.
The current rental tax rates,
Yes.
well, we have different classifications of a person according to the law, and we have individuals where we talk about a person like Claire. If Claire, has a rental property that I'm meant to pay taxes for, I'm at a rate of 20%. Then if it's a company, take an example, Musime Limited. This particular company is meant to be taxed at 30%. Corporation tax rate still stands.
Thank you, Claire. Is a loan repayment an allowable deduction when paying taxes for rental income?
Yes, it is. And when it comes to an individual for the current financial year, we have the threshold, the 2,820,000 shillings, caters for the different expenses incurred by an individual. Then when it comes to a company, we have the 50% limit, 50% of the income that you have earned. So this time round, it has been limited and capped to a 50% of the rental tax income. So all your expenses will be embedded or are embedded within the 50%, and you deduct, and the other 50% shall be taxed at 30%.
Okay, this seems like an easy question, but it's quite common among so many people. People keep asking, how do you know that I'm a landlord or I own these units or rentals? How does URA know that?
Well, URA has, first of all, we have implemented a new system, yes, the rental tax compliance system, where we're able to get information about the different tax lords landlords and property owners. Now, at the same time, we also have different collaborations with different MDAs, where we are sharing information, exchanging information with these particular MDAs or government agencies. So we share this information, it's available to us. Take an example, if you have water meters in your names, definitely according to the way National Water registers the water meters, it's according to the owner of the property. So if you have water meters running under your names, then we expect you to be the owner of this particular property.
Okay.
Yes.
So what about these landlords who give every tenant their own water meter, maybe their own yaka? How do you determine whether they are tenants or landlords?
Usually it's from the different sources of data.
Okay.
At the same time, we have persons that pay property taxes
Okay.
under the local government or KCCA.
Yes.
We also have that data exchange, and so once we see that you are the one paying property tax,
Okay.
it's a different avenue. So making comparison and combining all this data then gives us who exactly the property owner is,
Yes.
and therefore it's the person that we shall tag the rental tax to.
Okay. So when rented property was built through a mortgage loan, I think we've answered that. How about land? Is it also taxable? Let's say empty land. Someone has a piece of land, they are not using it. How is that taxed or treated by URA?
Idle land is idle land.
Okay.
You see, taxes are charged on income.
Okay.
Where there is no income, then there's no tax.
Okay.
But where there is any small, slight appearance of income,
Okay.
then the tax comes in. So if you let out your property, your land,
Okay.
it means somebody is paying rent
Okay.
for this particular land. So that rent that you'll earn from that letting out of that piece of land
Yes.
shall be taxable. You're obliged to pay rental tax on that.
Yeah, so a number of landlords have been asking, if I have my units or my apartments and I'm making the losses, or maybe my tenant takes long to pay, or they don't have money and maybe I'm being lenient and somehow the money does not come in, it's a loss on my side. How does URA treat that in regards to filing returns, which definitely will be late, but I'm saying, give me a grace period to get this money from my tenants and then I'll pay. How do you treat a landlord like that?
Well, we have the tax system is based on an accrual accounting system.
Okay.
Now, accrual, it means whether you have received it in cash or not,
Okay.
then you're meant to make a payment.
Okay.
And then we also have the option of cash basis, where you earn and pay taxes as the money comes in.
Okay.
And for you to do that, or for you to use this platform or this provision, then you need to make an application to the commissioner for them to grant you this opportunity to file returns and pay taxes based on the cash basis.
Okay, so there's this question that kept on coming up between property rate and rental rates. Now, the person gave a scenario of they have these apartments in their names, they have some tenants, and it's their only business. So they pay rental income tax on these properties, but then they're also being asked to pay property tax. How does that work?
Well, now property tax is under the local government.
Okay.
Now, here they charge a fee on property. Okay. Any structure that shall be on this piece of land.
Okay.
Now URA looks at, like I earlier said, income. Where there is no income, there is no tax.
Okay.
So URA will only charge where there is income being generated. Now, property tax that is monitored under local government or KCCA is a different arrangement. Those government is ensuring to earn from this to help manage properties, areas. Take an example how KCCA works. We're able to get roads out of this whole thing. This is how the budget is run, and this guides and helps the budget. So there's a separation here. This is the fact that you have a property, a structure on a piece of land, so you pay property tax on it.
Okay.
And then at the same time, KCCA or local government shall tag an amount, a valuation of your property.
Yes.
And say, I think here we will take it as maybe valued at 500,000. And therefore they'll tag a rate to this 500 that you will pay. I think it's annual. They pay it and then we are good to go. Then when it comes to rental tax, it's all about the income. If there is no income, like I said earlier, then there is no tax to pay. So once you have income, we kindly request you pay some tax.
Yes, then some people may feel like they're being double taxed when it comes to them paying rental income tax, and also they're being asked to pay business income. The rental units are their businesses,
Yes.
so they feel like they're paying double when they pay rental income tax, and then they also have to declare business income which they pay tax on.
Ah, okay. Well, we need to make some more, let me make some clarity.
Okay.
When it comes to rental tax and business,
Okay.
now, 2014,
Okay.
the law made it very clear that there is a separation between the ordinary income tax and the rental tax. Because we were failing to have really clear monitoring when it came to rental. So these were separated.
Okay.
Come 2014. So when this was done, you will notice that the return provides for business income and then rental income separately.
Okay.
So that means for somebody to be charged business income, one should be having a business running that is exclusive of rental income. So that means, I'll take an example.
Okay.
I have a business. I sell merchandise, general merchandise, and at the same time, I have property that I let out.
Okay.
Now, that means I have two different kinds of income.
Okay.
One from the general merchandise, and then one from the property. So the general merchandise will classify it under the business income. Therefore, separate the income that's being generated from the merchandise and the property. When it comes to the property part, where your tenants are paying you, that income should be declared under rental income. Yes.
Okay. I don't know why some people feel like you also take their money they get from rentals as business income because that's their only business.
No, we do not do that.
We do
If
not.
it's being done, then either the tax agents need to amend, because you see, what is availed on the return, it's a self-assessment. It is you, the taxpayer, that brings this information to URA and says, URA, I am earning business income and also rental income, or I'm just earning business income. And then when it comes to that, and we only know that you only have rentals, then we say, no, this is misclassified. We expect it to be under rental income. So we shall expect you to amend a return, removing this money from the business income and taking it to the rental income. But we do not tax both, yet it regards to rental. We separate those two.
Okay.
Yeah.
Makes sense. Thank you so much, Claire. Now there's a situation where landlords pay other fees, like let's say repairs, maintenance, security guards, and maybe all those small fees, rubbish, they pay for them. So how do you only treat them as expenses, or is there a list for these other fees that you treat as expenses, and then what is considered an expense?
Well, an expense is what you put out, what you spend out to have something done.
Yeah.
The monies that go out. Now, expenses are classified in two categories. We have the capital in nature and we have the revenue in nature.
Okay.
Now, the revenue, we expect that to be expenses that go out for this particular year, and they're usually the running costs.
Okay.
I need to have this repaired, there's a piping that has jumped out, or a fastener that is missing, I fix it. Okay. Now, the capital in nature. It's big. It's going to run for. We expect this to run for quite a long time.
Yeah.
I'll take an example of a structure of a building. If now we put down one side of this wall, remove one wall,
Okay.
and say let's put a window, that's a very big change.
Okay.
As compared to, oh no, I need to fix the handles of this particular window. So that makes a difference.
Okay.
So we shall classify this into a capital expense and saying now this is part of the building cost. This is going to run for a very long time in this state. This is the change we have made on this building that is going to run this long. And again, also the magnitude of the expense that you declare is questionable. So that's when, again, the accountants are able to tell and say, no, I think this is a revenue expense and this is a capital expense. So usually we ensure that the tax agents are able to guide the landlords on this, or the taxpayers on such classifications, so that it's easy to declare and filing is made easy.
So what about these fees, these expenses that I mentioned, the security guards,
those are revenue in nature.
Okay.
So what we expect is documentation.
Okay.
I think what lacks majorly is usually documentation. The record keeping is a little bit hasty. So we continue to encourage our clients to ensure that records are kept. Because once you declare this, we need to verify these particular expenses. And the only way we can verify is if documents are made available.
Okay.
Yes.
That really makes sense, and it solves, I think it also answers some of the questions that keep coming up. Now, is it possible to do a quick computation just for our landlords and the viewers to understand what are the thresholds we are using currently and how do you compute so that they're able to self-assess and pay these taxes?
Oh, yes, I can make a quick computation.
Okay.
So we can have this.
Okay.
So we have individuals here.
Yes.
The example I gave as clear.
Okay.
Yeah.
Yes.
So if I have a property and I'm earning from it, we'll have your total annual gross income. Yeah.
Yes. Yes.
What you have collected for the year, or what you're meant to collect for the year in terms of accrual.
Yes.
So if here we have about, let's say, 30 million that you have earned.
Okay.
Take an example of 30 million as our annual gross income.
Okay.
The first thing is to identify the amount, and then secondly, apply the threshold. By the law, it is 2.8, 20,000 shillings.
Okay. Yes.
So once we have 2,820,000, we shall deduct this money.
Okay.
And therefore, we'll have 30 million minus 2,820,000.
Okay.
This gives us
27,180,000.
187,000.
Yes.
So
It's 27,180.
180.
Yeah. Let's remove the 7.
Okay. So once we have this, it means that our chargeable income shall be 27,180,000
Yes.
shillings. Okay?
Yeah.
Thereafter, from this step, it means we then apply the rental tax
Okay.
for the individuals, which is at 12%. So it will go to say 12%
Yes.
of 27,180,000.
Okay.
What do we get there?
We get 3,261,600.
3,261,600.
600.
600,000. So this is how we would compute. This would be the rental tax payable for the financial year 2022/2023.
So there are no expenses allowed for individuals?
No, the expenses are taken care of under the threshold.
Okay.
Okay.
And for individuals, there is no, the timeline is, this is the total annual.
Yes.
Okay.
And to know that the law is also very considerate in terms of cash flows.
Okay.
We may have challenges, yeah, in terms of how do we pay this money.
Okay.
I received 3.2 million. We say pay this in 4 installments.
Okay.
So you will divide the 3.261
Yes.
600 by 4
Okay.
in terms of payment.
Okay.
So payments for the individuals is 3,261,600
Yes, 600.
divided by
Okay.
4.
That is 815,400.
815,400.
Now, someone would ask about those penalties and the interest that comes with installments. Are they still applicable here or they are not?
They are applicable. Now, when it comes to an individual,
Okay.
I'm sorry to combine the two, but I think it's the right time to have
explain.
better elaboration in
Yes,
this.
yes.
Now, this shall be due. If we take an example of a financial year,
Okay.
financial year ending 30th June,
Yes.
okay? It means our first installment shall be due, that is September, 30th September.
Okay.
So 30th September
Okay.
will be due in regard to the 815,400.
Yeah. Yes.
Okay? So we'll expect you 3 months to be able to get this together
Okay.
and then file and pay it.
Okay.
So once this is paid, no penalties coming through,
Okay.
no interest coming through, if by 30th. So between 1st July and 30th September, July, yes, 30th September, then we have 815,400 to pay.
Okay.
We clear that. Then again, the next quarter,
Okay.
we say also in 3 months, should be able to get this money, put it together, and clear the 815,400.
Okay.
So this goes on until the 4th installment that ensures that you've cleared the entire 3.261,000. And then there we are good to go in terms of
The year.
compliance
Okay.
for the year. No interest, no penalties.
So rental tax is annually, not monthly.
It's annual.
1 year. Okay.
Yes, yes. The only thing is the payments are as the normal income tax.
Okay.
It's in 4 installments for individuals,
Okay.
and then different for the companies, which we shall also explain when we get into companies.
Okay.
Yes.
Makes sense. Thank you, Claire. So next is companies,
We have a different person called a partnership.
partnership. Okay.
We have a partnership where we have different individuals coming together
Okay.
intending to run a certain business with different terms in terms of how much are you bringing in, how much you contribute. If you and I are together in this, then you say probably you're coming in 60% and I'm coming in 40%. I contributed my capital at 40%, you contributed at 60%. So everything in terms of expenses and contributions shall be tagged to this particular apportionment.
Okay.
Now, when it comes to the rental tax, again, we come to determining what we earned for the year. So I beg we persist with the same.
Yeah, same is
yeah?
okay.
So the annual amount
I hope our viewers are following because they needed an illustration, which I think we're doing.
Okay, great.
Yeah. So annual gross rental income, we use the same 30 million.
30 million.
Yes.
So we take it as, again, because the partnership has individuals.
Okay.
Yeah.
Okay.
So by law, it's allowed that they should be handled or taxed according to individual rates. So again, we deduct the threshold,
Okay.
which we have as
2 million 820.
which gives us a chargeable income
Of 180 million. 180 million.
180. Okay.
Yes.
Then from here, we charge the tax rate
Okay.
at 12%. Okay.
So Claire, if I may ask, how does the apportionments come in of the 60-40 that we talked about?
It's going to come in after.
Okay.
How much each shall be liable to pay.
Okay.
Yes.
So we continue?
Yes. So we come to 12%
Yes.
of 180,000, which had given us
3,261,600.
261,600.
Yes.
Okay. So now,
Okay.
here we come to split partner A and partner B.
Okay.
So partner A,
Pays.
if she's at 60%,
Okay.
it will be 60% of the 3,261,600.
Yeah. That is 1,956. 956. 960. Okay.
Okay.
Then partner
B,
does the 40.
who's at 40%,
Will pay.
will pay the difference.
We will pay 1,304,640.
Yes.
304,640.
304,640.
Yeah.
Okay. So URA shall be demanding from partner B the 1.3 million, and then from partner A the 1.9 million. Yes. So now, when it comes to trustees and companies, because those are different kind of persons by law, we have the law under 2022-2023 saying 50% of the annual income.
Okay.
So we come here, we have the rental income, the annual rental income,
It's 30 million.
30 million. Okay.
Yes.
Here immediately we charge
The
here
50%.
immediately we charge 50%
Okay.
of 30 million.
That is 15.
Now, something that we need to make emphasis on.
Okay.
If we have incurred different expenses,
Okay.
even we have, take an example, we have a list of different expenses. We say we have the interest, bank interest, we have repairs, we have all these, and they're probably totaling to about maybe, let's say, 70 million.
Okay.
If we take an example that the expenses, total expenses, are at 70 million. We are saying we're going to limit them to 50% of 30 million. So which would bring us to 15?
15%.
15 million.
Yes.
Now, this 15 million,
There's very little compared to the
we
expenses.
are picking it from the 70.
Oh, okay.
You should have incurred. You should have incurred. And then we are able to verify these particular expenses. So the limit of your expenses is tagged to 50% of your income.
Okay.
Now, if your expenses are, take an example, 15 million, it is the 15 million you shall consider, because you should have incurred the expenses.
Okay.
If the expenses are 5 million, it is the 5 million that is allowed, because it is what you incurred. Those that are far higher than the income, we are expecting that we limit it to 50% of the income.
Okay.
Yes. So thereafter, the 15 million is when we charge the tax at 30%.
Okay.
So it will be 30% of 15 million.
That is 30% of 50 million is 4.5.
$4.5 million.
Yes. So Claire, if I may ask, what happens to the balance, the expenses that are beyond 50% of the annual income?
They are not allowed.
So can they be carried forward?
No.
Okay.
It is expenses for the year.
For the year. Okay.
For the year that generated this particular income. That are allowed.
Okay.
And then limited to 50% of that income. Yes.
Okay. I hope our taxpayers have taken notes.
Yes.
And that the next time they compute, they will be clearly guided by this illustration that you've made.
Yes.
Yeah. So is there anything else maybe you could have missed or want the taxpayers to know regarding the thresholds, timelines, and the rates currently?
In regard to timelines, filing,
Yes.
you're given 6 months to make your filing.
Okay.
And we believe it's really good time. So we advise taxpayers to always utilize this timeline.
Okay.
And because it's not fair for you to go into financial constraints because of penalties and interests and all. And then we also encourage taxpayers to keep communicating to us where there is difficulty. We are open to guiding.
Okay.
We are situated on the upper ground of the URA Tower, right below the Sendaula Hall. So that office is open, we are available, and staff are there ready to serve and guide accordingly for any challenge that you may face.
Okay.
Yes.
And a quick one, we have a question from a taxpayer.
Yeah.
He says, why does the system bring a PRN with a liability, even in instances where the tax has already been paid?
Well, at the moment, the return, the PRN tagged to the return is auto-populated.
Okay.
So once you file the return, it will auto-generate.
Okay.
Yes. So if you've paid prior, we do appreciate and we do not stop you from doing it.
Okay.
And kindly, you can still ignore that PRN. It is not tagged to your tax ledger.
Okay.
Yes.
Sarah says, comment about the withholding credits not credited to our individual ledgers for purposes of accounting for rental income purposes.
I think here I just need to go a little bit back and throw some more light on. This is now according to what has been happening. Well, you know, there was a separation, like I had earlier mentioned, there was a separation between income tax and rental income tax.
Okay.
So once the separation came through, this was effective 2014, there was a split.
Okay.
Now, it was no longer classified as income tax. It was now classified as rental income tax. Now, for the transactions that happened prior 2014, 1st July 2014, were being looked at as income tax.
Okay.
And if we get into the accounting way, it's the like should match.
Okay.
So when we started the 2014 rental income tax, then all these, whatever was falling after that was matched to that. Now, there are those where there's withholding tax that is falling under income tax. That's where we had a challenge, there's that gap. Okay. However, we are still trying to find better strategies on how to manage our clients in regard to this query. And at the same time, for any transaction that you feel is amiss, we kindly request that you come to us and we have this reconciled. We have a full office, the debt management office, that looks into the ledgers. If you have your documentation, you bring it forward, they look into it and they input this missing transaction.
Okay.
We wouldn't want for you to pay what is not due.
Okay.
So the system is fair. And the platforms to clear all these gaps are available.
Okay.
So we still call upon our taxpayers, please come, we take you through also the debt management part. Whatever is amiss, we shall embed as long as there is proof that all this was incurred.
Yes, thank you, Claire. Geoffrey Tayewa says, I find it tricky where she says that as a company, you are given 50% of your gross rental income as expenses and you won't be allowed anything above, but she goes ahead to say that they will verify what you incurred and that is what they will take. Is this against the law and double standard since you won't allow me anything above 50% as my expense? I don't know.
No.
Claire.
No, it is not.
Maybe you could re-explain a bit more.
Yes.
Yes.
For expenses to be claimed, they need to have been incurred.
Yes.
Yeah? For every expense, there should have been some documentation to show that something actually happened.
Okay.
It's not that we don't want to give it to you. No. Did it incur? Did it happen? If it did happen, then the document present, we take off on that set. So once you have your documentation clear, there shouldn't be any issue. Yeah.
Okay. Anonymous says, thanks for this informative session. My request is that this information be trickled down to the landlords, especially on self-assessment, because most fail to meet the timelines due to lack of sufficient information. Okay. This would greatly improve on compliance, and before these fines and interests are levied, let there be liaison teams to reach out to these clients. I think that's a good suggestion.
We are very grateful for the suggestion, and yes, these engagements are happening.
Yes.
Because the different changes in the law have also gotten us to know that we need to continuously engage our clients so that there is compliance and we limit these penalties and interest issues.
Yeah, I think in regards to having this information out there, they could find it on our web portal.
Okay. And
I'm sure they can always call in to our toll-free numbers at the contact center, and also reach out on our social media platforms like YouTube, Facebook, and Twitter. There are always people handling those and answering and sharing information. Yeah?
Yes.
We shouldn't really be stuck. Yeah, so thank you, Claire, so much for this session. It has been very informative, like one of our taxpayers has commended. And any parting shots?
Thank you so much, our dear clients. Yeah. We are very grateful that even you've logged in and paid attention to all this. And we continue to call upon you to indulge and get in touch with us. The doors are open for you. We are here to serve you. We are here for you. And we're here to avail you all information that you feel you need to know. So the doors are open, and we continue to pledge to you quality service. And we also request that you continue to comply by timelines to avoid any inconveniences. We wouldn't want to go that way. And we continue to thank you for paying your taxes, and we encourage that you continue to do so as we develop Uganda together.
Thank you, Claire, for coming on. I know our time has run short, but Godfrey, again, he says, even the above 50% expenses have documents.
Yes.
For example, the mortgage interest, why does URA refuse it?
No, it wouldn't refuse it.
Why would you refuse something that has gone over 50%? I think that's what he's asking.
The law has been made,
Yes.
limiting it to 50%.
50%.
Yes.
Yes, Geoffrey, I hope we've understood each other. According to the law, 50% is the capping point for allowable deductions for companies, yes?
Yes.
And then individuals and partnerships do not have any allowable deductions.
Apart from the threshold.
And the tax rate is 12%.
Yes.
And the threshold for both is 2,820,000.
Yes.
Yes, that has been my takeaway, and I hope that we've clarified on those tax rates that are current for this financial year, and taxpayers and clients shouldn't be confused. Thank you so much for joining us today. If you have any more questions, please kindly reach out on our social media platforms. We shall be able to answer them on there, and also our YouTube. Thank you so much. Have a good day, and it was nice to have you all on board. Thank you.